Good morning, traders. Welcome to the Stock Market Morning Prep video for Tuesday, September 22nd. Well, we got some big moves in the overnight. Boy, I'll tell you, Europe down 3%. We rallied yesterday, and again, markets have no memory from day to day, so your analysis is key to successful trading. Make sure you realize that, guys. We are down 27.5 handles in the ES Electronic Globex session. Not good, not pretty. I've been saying let's sell some rallies here, and I continue to do so. We have a big window of opportunity here to the downside where market seasonality, we have a weakness up until the end of October. Where also October is where we get the trend change. Somewhere to the second to the, actually let's just say third to the fourth week of October, we usually get that reversal and a big reversal spike to the upside. Does it have to happen this year? No. Markets are at 6-year highs. And maybe it is time for some profit-taking, pullback, and or a correction for that matter going into the end of the year. I'm not saying that it's going to happen. Seasonality trends usually have a Santa Claus rally, if you will. Now, let's move forward, fast forward to now. I am looking to continue to sell rallies into resistance, right? We get a number, we sell rallies into that area, we wait for the reversal, and then we get short. We don't sell because we're getting into an area, a number where we like to sell. We want to make sure that we have confirmation that we're selling rallies and or buying support for that matter, okay? So just keep that in mind. I'm right now looking for selling bonds, selling equities, and buying, rolling into commodities, and that's what usually happens when you have a market top. Market participants, hedge funds, money managers, they look for reducing their exposure to the long side in equities, and they look for beaten down commodity plays, and that's what has happened in the last 6 years. So let's take a look at TLT, which is a ETF to buy bonds, and as you can see here, we're making lower lows and lower highs. I would continue to sell the TLT if you are interested in selling instead of just buying. You can do the inverse, which would be the TBT, which I like to play personally. And if you see here, we're basically pulled back down to about, well, actually almost 76.8% on the Fibonacci, but we're now hovering right around the 50%. So we did pull back from these local highs, that little double top we had here. So this pullback, bonds are up right now on flight to safety. Any pullback to this area, 44-ish, I would look to start nibbling in long myself. So I'm looking for the TBT to play bonds short. You get long TBT. So take a look at the indexes here. And as you can see, I mentioned yesterday, I highlighted the market area where we had the Fed announcement on Thursday, Friday. We had a doji indecision candle, and we're still within this range. We haven't even, again, guys, we haven't really, aside from this candle, haven't really even retraced back up to 61.8% retracement. So very weak. I think the indices, I do see us touching this this September 1st low, and then ultimately I do think we test this low, if not go further, okay, before the markets get a little more healthy, okay? So remember, if you're a longer term investor, protect your portfolio. If not, maybe reduce your longs into any little rally, because that's what the market participants are doing. The big money, smart money guys are doing that. We take a look at the 60-minute. I've showed this to you yesterday as well, and as you can see here, big symmetrical triangle broke out of Fed day, touched it, tagged it to the penny. Okay, not quite filled the gap, but I think that's pretty close. And then now we're sitting right here. Spiders are trading at 193-ish, so broke that 38% retracement, and then probably looking ahead a little bit lower. Again, September 1st low. I like this area here as a continue, as at least a short-term support, and then of course the ultimate spike low down here. That's a 60-minute spider chart. Okay, take a look at the IWMs. You can see that. Now, this is one of our secondary leaders, and it is the weakest. Not a good sign, man. Not a good sign at all. Why? Because it's a good gauge of risk, right? Risk on, risk off for investments. It's basically how the investors are feeling. And the investor sentiment right now, if you're looking at the IWMs, is not pretty. Lower lows, lower highs continually. This is not a good sign for the bulls, okay? If the IWM, which is the Russell, starts to really break down hard, everything else would follow. I could probably be safe to say that. Now, also, if that's going to happen, then of course the transports are going to run out too, and they're going to run lower as well. Now, remember we talked about transports coming into some seasonal strength, some retail. Technology does come into some seasonal strength. I like the banks as well, a little bit further out. But remember, guys, because the banks, The Fed is stuck in a corner in a big way, and that's why be very careful if you own any bond fund, because what happens is eventually they're caught in a corner. They have no choice right now but to raise rates, and when they do, everybody's going to be running to the exit doors on the bond funds, and that's going to really create havoc for bonds. And what's going to happen is that when bonds start to really sell off hard, the equity guys are going to say, oh, this is not good. They're going to sell equity. So they're going to sell good assets to pay for bad assets. It's just going to be a trickle effect, okay? That's why start looking at some of these commodity names that have been really beaten down. Not saying to do it now, but look for that. When that does happen, you'll see eventually these commodity guys, commodity names will start to perk up a little bit and start to really play out to the upside, okay? Might be weeks out, but just something to keep an eye on and keep in your radar, okay? Take a look at diamonds. You can see here, same thing. Nothing good about this chart at all. Nothing good about any of the indexes, to be honest with you. The only thing that I did like is the Qs here. And again, technology is holding up rather well. So if we're going to have a market turn down or something for a big flush, look for these technology guys, technology names, because I am liking the fact that this is holding up rather well, as it did for 2014 and all of 2015, actually. So some of the beaten down technology names, when we get the flush. I wouldn't do anything here. I'd be looking to sell rallies. Again, September 1st, right around here would be your first low, and then, of course, the spike low down here, okay? Guys, I hope it helps. Be safe out there. Wouldn't look too short on the opening here. You're down 30, almost 30 handles now. I would kind of wait and see where the market does. Maybe if we get a good rally, and I mean a good rally. I don't mean just a dead rally, a dead cat bounce. If we get a decent-sized rally into some resistance, then I'm going to be looking to take a short entry here today. Have a great day, everybody. We'll speak to you tomorrow. Take care.